travel the world from Chicago to Detroit, Paris to London. Don't you try to stop me, I've already made up my mind. I'm packing my bags, there's no turning back, something I'm leaving behind. And I may not be coming back just for you, just for you. And I may not be coming back just for you.
What up, though? What's going on, y'all? Good afternoon. Gotta add myself to the meeting. Welcome. Press that like button, subscribe button. Let me send this out to the world. Tell them we live, baby. Share it to all your people on social media. Where's the live? The live is here. And I was on time. Your boy was on time today.
Don't you try to save me, I know what I want from me.
I'm almost finished sharing it to everybody. Because we going to be on live for a while today. We going to kick it. Do it on Twitter. Let's tag the Federal Reserve. As soon as I get on live, Mom calling me. What's up, we live? Meet us on Twitter. What up, though? Detroit in the building. All right, I'm finished. What's going on, everybody? Good afternoon. How are y'all doing? I hope it's a great day. We're going to speak good prosperity. We're going to speak wealth. We're going to speak good health into your life today. We're going to talk about Fed meeting. It can go good. It can go bad, but I think it's going to go good. The meeting start at 2:30 p.m. Eastern Standard Time. And I'm going to first be in the studio. Then when I got to go on dead duties, because wife have to go to work, we're going to transition this upstairs. I hope it's a good transition. Let me charge this already. But we will see, you know. We got to do some hood rat things. We got to do what we got to do. We'll see what Papa Powell is going to say. But before we get started, I have to do a shout out to Moomoo. See, I got my little Moomoo toy. So my player, he gets to pull his glasses off, you know, whenever he wants to. Since it's sunny outside today, he got them on. So my player, he got his glasses on today. Shout out to Moomoo. If you haven't did it already, they doing a promotion. They doing it for my subscribers, my viewers. Y'all get 3 free stocks just by doing a deposit of $1. What they're doing is trying to bring the awareness. Once people, they know, once people sign up for Moomoo and use the app, you're going to be stuck in it. You know, I used to use Webull, Robinhood, all that stuff. I just use Moomoo. Now, once you actually use it, you see how much you like them. So you get 3 free stocks. First one, when you open up the account, you get from $3 to $3,500. Then you get another free stock from $9 to $3,500. And just because you are on my channel, on a player channel, you get a free Neo stock. Sooner or later, I will ping it in the comments, but you can click the description and get signed up. That is before the end of this month. Let me know what free stock you get. I forget, was it Jewel? She got like a GM. She got like a good stock. My stocks was like Siri and GoPro. Got some low stuff. And also got to do a shout out to Hodlnaut. You might as well earn money while you are sleeping. Work smarter, not harder. Let your idle crypto work for you. Mine is going up good right now. It's no lock-in period. You can put your money in and you can take your money out. Customer service is great. I talked to them last night. You get paid every single Monday. I'm getting 6% on my Bitcoin, 5% on my Ethereum, and I have money in my USDC making over 12%. Now, I know a lot of people seen yesterday, I was showing my account, showing you guys how I'm buying in because I want to buy some more Bitcoin and Ethereum. Remember I told you I had put in a price notification thing when Ethereum dipped? I got the notification. But you know, on your phone, you get like 50 different notifications. So I didn't, and I'm not used to putting alerts in. I didn't pay attention to it, so I missed my buy-in point. So I have to wait till it come back around. So shout out to Hodlnaut. Click the link in the description. Sign up. Whenever you guys sign up, and send me an email. So if y'all go ahead and do that and get you a free $30 just by signing up and doing your first deposit. Let's see who's all in here. Lusky in here. You know the face is on the thumbnail. Get to, you know. What up, though? We got Javion in the building. We going up today. What's my take on what? Hi, I have the meeting, so with Mr. Fed. Let's see. Hi, I have a meeting, so with Mr. Fed meeting, I will appreciate your coverage. We'll watch it later. Come on back later. You know we going to watch it live. We going to talk about it. We going to kick it. We going to see what Papa Powell is doing. Is he's going to give us some good news. I believe, you know, we're going to get some good news today. He's just going to come on. He's going to say, hey, you know, this was going on with the economy. This how many jobs we have. It's looking good right here in the job market. You know, with oil prices, that's a different sector. We are reviewing that. The new barrels is down to 90 some cents from the high of 130. But basically just going to say all that. We're going to raise, you know, rates just a little bit. So it's going to be real conservative type of meeting. If you ask me, I don't think it's going to shock the market. I don't think the stock market is going to start going crazy. Bitcoin start going crazy. But while we're at it, let's look and see what's going on with the market. Not right now, but right now. So we look at the stock market. I still didn't update my sound. I got to do that. We look at stock market. Everything is in the green. You got the Dow is in the green today. We have NASDAQ in the green. Most stocks are in the green. Let's see. Look like everything besides gas, because fuel prices is going back down, where the barrel is going back down. I don't know how long it's going to stay down. Siri. Yeah, it's a green day. This 2 days in a row. Say the Dow climbs. Actually, let's do this. We'll go to business news. Stocks climb ahead of anticipated Fed rate increase. And they raising because they know nothing ain't about to pop off like that. I don't think it is. The S&P climbed 1.8%, building on Tuesday gains. The tech, focus, NASDAQ composite, advanced 2.8%. The gains were broad. Whoever just gave me a dislike, your mother is a Jezebel. She be doing freaky things at night. To talk of compromise on both sides. Lift hope of Russia and Ukraine breakthrough. Stocks making the biggest move midday. Alibaba. I haven't heard about Alibaba in a while. Any Alibaba holders? It was a good buying opportunity last time I covered them. True, Alibaba under $100. I might have to add them to my list. Yeah, I'm definitely going to add them to my list. So today I plan on doing a video, doing a video about top. Let me text this to myself, because if I don't, I will forget. I'm doing top 5 stocks to buy under $100. And Bow Wow, you might make the cut. And I got the video planned out. I just haven't recorded it yet because those videos take those quick. But then again, the weather is good outside of Michigan, man. It's 65 degrees today. It went from snowing 2 days ago to cold as hell to warm, then to now 65 degrees today. So it's like that get sick weather where it forces you to want to go outside and enjoy life a little bit, right? And you go outside and you're going to wear a whole bunch of nothing because it's so hot. And you're going to get sick as all hell. So I hope it don't get too bad because, yeah, me and my son ain't going to look good. How 5G could send a weather forecast back to the 1970s. Let's see. The Fed meeting, latest news. Interest rate set to rise for the first time since 2018. In 4 years, the Federal Reserve is on track to raise its benchmark interest rates for the first time since 2018 as officials look to cool inflation that is running at the highest annual rate in 40 years. The central bank is navigating the usual NASDAQ. Yeah, so, if you're buying some stocks, might as well do it. Anybody getting in on Amazon? Amazon before the split, I believe the split is going to be, they say June 6th. We don't know the exact date. It's going to be early June. History show that it might go down right after the split, so you could wait. James Bond and Rocky franchise move to step closer to Jeff Bezos' EU green light. MGM deal. I'm not hip to that one. And Amazon Whole Foods planning big change for Prime grocery shoppers. Never use Prime grocery shopper. Shop for groceries. Mark Zuckerberg has controversial plans for Instagram. I read a little bit about this last night, but Mark Zuckerberg didn't give us real insight. But basically the word is he's going to start doing some form of NFTs on Instagram, but he didn't give us any insights on it. We will see. I will probably read it later to see if he gave us anything. But that'll be good. I like it. Do it. It's good to get NFTs mainstream, but honestly, I feel it will reduce the value of NFTs. Everyone will start creating a project with no underlying utility. People are doing this right now. So you're too late. You're too late for that one, if you ask me. Your boy I'm on live right now. There we go. Everybody want to call a player when you laugh. That's what they want to do. Yeah, we'll see about that. Tesla. Actually, let's look at a few. I want to look at Amazon. Amazon is approaching back over $3,000. So let's see. Amazon in the last year, right? They went up to 3,700, low is 2,600. I believe the sweet spot of the stock split is $3,000. If it stayed at $3,000, the stock split would mean Amazon is $150 a share. I would like that, and I can foresee them start doing dividends within the next 5 years to attract more people. What's y'all thoughts about that? Shout out to everybody that's new in here. Hope all is well. If you haven't done it already, hit that like button, hit the subscribe button, all that type of good stuff. We're going to talk about the Fed rates and all that type of good things. We got Canada in the building. MC, what's going on? Just hit that like button. He didn't even just hit it. He smashed the like button. Exclusive bomb for you. Smashing that like button. If y'all ain't did it already, do it now. Get us up to 15 likes. We need one more like. Keep them things going, baby. I'm thinking about buying Neo. Well, you get one free Neo. All you got to do is sign up for Moomoo and do a deposit of $1, and you get you a free Neo stocker right there. So if you haven't done it already, do it right now because we got a long live, so you can do it. But my honest opinion, if we look at all of the EV companies, my favorite, let me show you. Don't do that. Where you at? My favorite of the three. Now, Neo is honestly my Spotify. So if we take it to the music world, right? You had Spotify came out first, and it have the most people because Spotify is first. Then you had Apple Music. Apple Music was the one that hooked everybody in because if you got Apple phone, Apple Music, everything is going to integrate with it, right? Then you had Tidal. Tidal, like, look, we're going to pay the artists the most, and so you got a few different options, right? Neo is Spotify. It don't necessarily make them the best and make them the first, so they have, they got the hood. So you have Neo, you have Li Auto, and you have Xpeng. These, for people that don't know, these are China EV companies, right? All are unique in their own ways. Years ago, I did multiple videos about them, covering all three. You can watch them to see my take on them. But my favorite is Xpeng. This is the one I invested in. I sold all of my Xpeng shares. I forget when I did it, some years ago. I'm going to buy back in because I know EV is where the world is going. But the reason I like Xpeng the most is because I love the CEO the most. And the people who worked at Xpeng worked at Tesla, and they're really mirroring Tesla a lot, but it's working. And with EV companies, especially in China, you want to see who's running it. Li Auto is good. The owner, he had a few failed ventures, but he's go hard or go home. But all three of them is not bad. Neo basically running. So you see even right here, you click one, you see the other ones. Neo, Xpeng, and Li Auto soar as Chinese EV stocks look to recover. So yeah, so my favorite personally is Xpeng. You can do some research and check them all out. But yeah, I say you'll be crazy not to invest and get in the EV world. You just can't really invest in them early. Yeah, because what I've seen with the EV world, it takes about 5 years for it to fully figure things out and pop off. What do I mean by that? It's like, all right, look at Tesla. When Tesla first came out, Tesla traded sideways for a few years before it really, start getting active, really start doing some things, right? So most of them are the same. Yeah, they got Lucid Motors because you get into this EV world, right? Most of them are already in debt. They don't have no real money. So once they start the company, all right, it's hard to get the units in production. Then you got to get the batteries. Then you're going to try to find a way to get the most efficient batteries. Are you going to make them in-house or are you going to outsource it? So most of these companies depend on so many other entities. Then when you have a pandemic, you SOL, and it's hard to get things really going. So that's why it's always just safe to invest in Tesla, because Tesla is light years ahead of everybody else, and they're going to stay ahead. So like the Lucid Motors, yeah, they're doing good, but they haven't been trialed, and they haven't been through the tough times where batteries exploding, unfortunate deaths, and all that type of stuff. So yeah, they have to go through the heavy deal. Shout out to everybody that's in here. We got Marie in the building. What's going on? I love everybody. Say what's up to Marie, one of my admins. We got another one, Corey, in here. Too many options, but it's Apple. Apple has ruined my music. Trying to give me some songs is wrong. Yeah, I have Apple Music on my Chromecast thingy, Apple TV upstairs. I don't even know if I pay for it, but I'm more of a Tidal type of guy. Let's see. So EV in 5 years, my AARP and yours would be on before it goes up. I mimic. I just look at Tesla. You got to look and see what Tesla did when it first came out. Corey crazy. So it's like, if we look at Tesla, right? When Tesla first got popping, this is what Tesla did. This is 2010 to 2019. 2010, Tesla was $4, under $10. 2019, it was $45. So it took 9 years to 4X, yo. So it's not like you're going to succeed overnight. They didn't get into profit level until like right here. That's when they finally start making money. Let's look at all these EV companies. Let's check them out. And since it's a new industry, kind of, we only can go off of what we can see. So this was shorter due to the Tesla run. It's like, oh, if Tesla did it, this can do it. So, this tricked everybody. It traded sideways for 2 years. Then it hyped up with Tesla, but it's going right back down to where it was at. The same thing. Now, Xpeng, which is my favorite, it didn't go on a crazy spike, but it's doing the same thing. And look at Li Auto. So they really just benefited from Tesla on that wave, if you ask me. Shout out. We got Lauren. We got all my admins in the building. Y'all, what y'all think the Fed meeting gonna be about? What y'all think they gonna say today? Let's look at the crypto market last night. Soon as I get off live, I said, yeah, Bitcoin gonna go to 42,000. Soon as I sign up, Bitcoin go to 41. And I know it's gonna tease me because it made me miss out on my buy-in opportunity. But it show and teach patience. You gotta have patience. Little bit of patience. Patience, you say. Corner market caps. So we got crypto is up over 1% in the last day, player. We have Bitcoin is right under 40,000. It's down on 5% last week, but it's up in the last day. Look how crazy this look. That spike. So like the people that was on a live last night, I was telling you on a live, I was like, look, Bitcoin went up, it went down, it went up, it went down, it went up, it went down, and I was like, it's about to go up, and it's going to go up close to 42,000. So I'm saying it's going to probably go right back on to 42,000. Then go back down. So it's look a little weird right here. I don't know. It just didn't do a full spike. It looked more spikish when you do it like this. But yeah. And when you have like a quick spike and it go back down, that means it's still about to come back and hit this level. It's just going to calm down and slowly go back up to this 41,000 play with 42 type of level. We have Ethereum is at 2,600, up 2%. And the last day, not bad. Have a lot of green. Luna been going the opposite of crypto lately. If everything been spiking and Luna been going down, which is interesting. But my opinion, buy Luna as much as you can under $100. This is a coin that will go to $1,000 a lot quicker than people expect it to do. I'm going to do a video on that alone. It's crazy. I have like 50 videos always in my head. Just whatever goes with the algorithm and it goes with the flow. Sheeb is trading sideways right now. We still have Matic under 140. They didn't go on a low rally. Yeah, Kronos is up 2%, right under 40. I think they went to 40 cent yesterday. Did it go higher than 40 cent? Nope. Yep. So yeah, Kronos is doing his thing, being great, doing a little bit of crow things. Who else is doing something interesting? Let's see on Coinbase. Usually show me the good spikes. Top gainers. Not hip to. I heard of this one. Interesting. So yeah, we got a few things going over in crypto. I really think it's gonna trade sideways really today. Bitcoin might go back up to 41,000. What y'all think? Shout out to everybody that's new in here. Let's get the likes up to 25. Let's get 4 more likes. FOMO. Shout out to everybody that's new in here. Darren in the building. What's up, Darren? What's up? The earlier you get into EV, the better the return. EV is the future. Yeah, because EV is 100% the future. It's just you can probably make more. It's money you're going to sit on. You better off throwing that money in that Hodlnaut account and getting 12% interest right now. Because even though it's the future, the world haven't did the right infrastructure for it yet. Like how Biden signed the infrastructure bill, we still got to have EV station on highways. Like in Michigan, EVs is really not popping off like that. It's more of a California thing. You see a Tesla everywhere in California because it's more acceptable. In Michigan, you'll see an EV a week, a Tesla a week. You don't see too many. And you really have to be in the rich type of neighborhoods. You have to be in the rich neighborhoods really to be able to charge your stuff. So yeah, it depends, but it's up to you if you want to get in on the EV world early or late. I think you have time to get in, and there's going to be a lot of good EV companies that's going to pop off. Who else we got in here? Lucid, I believe they are going to go up. Production, I believe, is going up, and I know in Arizona, I think they're almost in the final phase. Tax Haven, Tesla with Texas building roads. Yeah, Lucid is the luxury site. I think they have to figure it out because I seen Meet Kevin had bought a Lucid and everything could go wrong, went wrong with it. Like he was comparing, like it's just not, even though it's a luxury, it's not on the quality level of Tesla. So, I just get a Tesla. And my thing, like I did a status yesterday telling people I'm personally, I wouldn't get an EV until I'm going to get a guaranteed 400 miles to E minimum, because as somebody that drive a lot, that go out and go do a Uber Eats or want to do a road trip, the last thing I want to worry about is when is my damn battery going to die? Because soon as you get in the car, it's like it's your phone. As soon as you get in your car, you looking at the battery, you're like, all right, I'm at 98%. By the time you run around, you have 75%. Once you get to 60, you automatically thinking danger zone. Like, shit, if I go out 45 minutes and got to do an hour and a half, then I'm going to be in traffic. You don't want to be stuck at 20%. So that will be my mind once they get something over 400 miles, because a lot of these vehicles is realistically at 200 to E, 250 to E. Like, that's terrible. I'm not about to spend $60,000 for a car that I got to charge. And, but in California, they have it more open out there. I think the market will fall, and it might already be priced in. Yeah, it could be priced in. What's up, Mark? The regulation part should be talked about, plus potential spike rate. The regulations of crypto, that would be interesting. If they talk about that, crypto gonna get pumping. Crypto gonna get hype if they start talking about that. Let's see. Oh my, you said that Bitcoin went up. I was just about to hit you up like, I thought you said it wasn't, Guru. No, I said exactly. I said Bitcoin was gonna go to 42,000, and it shot up right after I got off, cause I know what I'm saying. I've been 100% right this year until I'm wrong. It's a good thing about crypto, where you're right when you're right, and when you're wrong, you look crazy. So you have all these predictions, and you get to come back and be like, I told you guys. Or you're gonna have people in your comments laughing. Oh shoot, we got the Fed meeting in 10 minutes. So this is what I'm about to do, because I have to be on dead duty at 3. I'm about to transfer all of this stuff to upstairs. Oh Lord, this is about to be interesting. Interesting, right? So let's see, how do I want to do this? All right, we need charger. And in the meantime, while we're doing that, we're going to listen to some music. You guys are going to sign up for Hodlnaut and Moomoo by clicking the link in the description. And then we are going to be back in 3 minutes. So I'm trying to think, do I want my real camera? I'll bring my real camera, bring my laptop, All right. And I do have my, hooked up. So I get my backup camera ready. Let's go. All right, y'all. So I will be back literally, hopefully, if everything go right, in 3 minutes right before this Fed meeting. Let's see, what music can I play that's not gonna me. Where we at? Shout out to everybody that's new in here. We got the Fed meeting that's about to come up. We're gonna cover that and see. Royalty free. Oh nah, that's my son intro music. Well played. I'll do this. Some Najee, some Nomadic. Where is? There you go.
If all you want is the chain, is it all for the name? Is that why you're in my lane? If I had no money, could you love me the same? Would I be the one you claim? Or is this all just a game? I ain't think so, I ain't mean her. Want the Benz and the Lex and the Beamer. Want the nails done every time I see her. But every other time she don't need ya. Got a new know how to use her. Get in tune with ya, make a fool of ya. Love she wants you to do for her, but that body crazy, so you say what that booty do? How them jeans fit your booty, boo? I want that tootie too. Toot that on my rollable. You look like you got that crazy mouth, that brazy mouth, amazing mouth. You single, well of course you're not, but I'm still trying to take that lady out, so we talk together. FaceTime nights, we talk forever. Months go by, we trust the vibe. No Dunkin' Hines, but I'm a chocolate lover. Fell in love with that shorty. Ended way too shortly. Sold me a smile and a dream. I guess it always as good as it seems.
Hey, what?
Yeah, let me know if all you want is the chain. Is it all for the name? Is that why you're in my lane? If I had no money, could you love me the same? Would I be the one you claim? Or is this all just a game? Let me know if all you want is the chain. Is it all for the name? Is that why you're in my lane? If I had no money, could you love me the same? Would I be the one you claim? Or is this all just a game? Breathe slow, love, think fast. Baby, would you love me if I ain't have all this cash? Would you stay around me, or would you diss me and clown me? Go back to the ones you was with before you found me. All the cheating and frowning, yeah, I bet you would. I know you would. You ain't used to under 7 figures, and I got the money that you want so bad, but you ain't getting with your trifling. And I never called you out your name. No, I never had another. Never disrespected you. I accepted you and all your kids. Last time, girl, it won't be no next time. No next time. You really f***ed up with the best guy. The best. Girl, let's go. No next time. No next time. No next time. Last time. Girl, it won't be no next time. No next time. You f***ed up with the best guy. The best guy. Girl, it won't be no next time. No next time. Let me know if all you want is the chain. Is it all for the name? Is that why you're in my lane? If I had no money, could you love me the same? Would I be the one you claim? Or is this all just a game? Let me know if all you want is the chain. Is it all for the name? Is that why you're in my lane?
All right, y'all, we about back.
If I had no money, could you love me the same? Would I be the one you claim? Or is this all just a game?
There we go.
Would you love me the
Dead
same?
duty. Now let's hook up this camera. Oh, we got that camera. And we got this camera. So now we need to change microphones. Get out my pocket. Get out my pocket. Let's see. Yeah, get out daddy pocket. Yeah, Dada. All right. Where is Yeti? There we go. Let me know in the comments if y'all can hear me properly. We are back. We got the Fed meeting popping up in 4 more minutes. So it's about to get popping. In my opinion, I don't think it's about to go too wild. We got Lauren telling everybody get them likes up. That is what I'm talking about. I can't drop exclusive bomb, but you know we good. What's up? Okay. Subscribe. Thoughts on NFTs and the metaverse being the real talk being real quiet lately. I think it's been loud. I don't think the talk has been quiet on it because every company is signing up different patents for it. So I think NFTs are always going to have like a down time where people not going to be talking, then it's going to be popping the next week. But I think people been talking about NFTs. Sonny, what's going on? My wife, she just popped in there. Why y'all ain't tell me my wife was? I'm talking about on the lab. I'm just not seeing your message. Hello, Mrs. Success. Marie said, hope all is well. Come say what up, babe. Come say what up. Come say what up before we got to do some Fed stuff. Hey, y'all, hey. There you go. She said, what's up? We got Mrs. Success. She got to go work for the man. Dear man. All right, let's see if they have that. I'll read some of y'all comments in a second. I need to make sure we get this meeting. Then I got to make sure y'all hear me properly. And it's going to be interesting to do because Omar took daddy's phone. All right, so we good. Look like it's coming up so I can read some more comments. Shout out to everybody that's new in here.
Omar, you want some cucumber?
The feds will see they want a piece of the cake. Biden is rubbing his hands like Birdman looking at these crypto prices. Shit, this old ass probably bought in on some of this. He like, hey, ain't no fun unless the old man get in on some. It's too much money in crypto. Fed has changed with the times. There's really too much money, and especially with DeFi, it's the wild, wild west. Whatever they keep on trying to bring up, we are adjusting to it as crypto family and a cryptocurrency market. And I'm keep on seeing it. The limited supply of Bitcoin is going away. And I seen a crazy statistic that in the last year, 60% of Bitcoin holders haven't sold, just sitting on their money. So people is not selling Bitcoin, man. So we all know it's gonna go down. So that's interesting. Yeah, better get in with it. Okay, I haven't went live yet. So the way I usually do the Fed meetings, I will show majority of it. I would give a little bit of perspective on certain parts, and when it get boring, I will show like the market, see what how the market reacting to everything they're saying. So let's get where can I look at the market? Stock market. God, stop that. Stock market live. We'll look at it on CNN. It don't give me the energy I want. Yahoo Finance. Nope. Market Watch. I love Market Watch, but they want you to pay for everything. So we'll see. Oh, here we go. Y'all can't hear him?
and the healthy financial positions of households and businesses. The rapid spread of the Omicron variant led to some slowing in economic activity early this year, but cases have declined sharply since mid-January, and the slowdown seems to have been mild and brief. Although the invasion of Ukraine and related events represent a downside risk to the outlook for economic activity, FOMC participants continue to foresee solid growth. As shown in our summary of economic projections, the median projection for real GDP growth stands at 2.8% this year, 2.2% next year, and 2% in 2024. The labor market has continued to strengthen and is extremely tight. Over the first 2 months of the year, employment rose by more than 1 million jobs. In February, the unemployment rate hit a post-pandemic low of 3.8%, a bit below the median of committee participants' estimates of its longer-run normal level. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. As a result, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. FOMC participants expect the labor market to remain strong, with the median projection for the unemployment rate declining to 3.5% by the end of this year, and remaining near that level thereafter. Inflation remains well above our longer-run goal of 2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. These supply disruptions have been larger and longer lasting than anticipated, exacerbated by waves of the virus here and abroad, and price pressures have spread to a broader range of goods and services. Additionally, higher energy prices are driving up overall inflation. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine will put additional upward pressure on near-term inflation here at home. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We know that the best thing we can do to support a strong labor market is to promote a long expansion, and that is only possible in an environment of price stability. As we emphasize in our policy statement, with appropriate firming in the stance of monetary policy, we expect inflation to return to 2% while the labor market remains strong. That said, inflation is likely to take longer to return to our price stability goal than previously expected. The median inflation projection of FOMC participants is 4.3% this year, and falls to 2.7% next year and 2.3% in 2024. This trajectory is notably higher than projected in December, and participants continue to see risks as weighted to the upside. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. Our policy has been adapting to the evolving economic environment, and it will continue to do so. As I noted, the committee raised the target range for the federal funds rate by 1/4 percentage point, and anticipates that ongoing increases in the target range will be appropriate. The median projection for the appropriate level of the federal funds rate is 1.9% at the end of this year, a full percentage point higher than projected in December. Over the following 2 years, the median projection is 2.8%, somewhat higher than the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Reducing the size of our balance sheet will also play an important role in firming the stance of monetary policy. At our meeting that wrapped up today, the committee made good progress on a plan for reducing our securities holdings, and we expect to announce the beginning of balance sheet reduction at a coming meeting. In making decisions about interest rates and the balance sheet, we will be mindful of the broader context in markets and in the economy, and we will use our tools to support financial and macroeconomic stability. As we noted in our policy statement, the implications of Russia's invasion of Ukraine for the U.S. economy are highly uncertain. In addition to the direct effects from higher global oil and commodity prices, the invasion and related events may restrain economic activity abroad and further disrupt supply chains, which would create spillovers to the U.S. economy through trade and other channels. The volatility in the financial markets, particularly if sustained, could also act to tighten credit conditions and affect the real economy. Making appropriate monetary policy in this environment requires a recognition that the economy often evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. We are attentive to the risks of potential further upward pressure on inflation and inflation expectations. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Let's go to Gina at the New York Times.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder if you could detail your thinking a little bit about how you're considering the risks of going too fast and potentially tipping the economy into recession, and how you're weighing those risks against the possibility of going too slowly, allowing inflation to become embedded and kind of getting behind the curve.
So, I guess I would start by saying that in my view, the probability of a recession within the next year is not particularly elevated. And why do I say that? Aggregate demand is currently strong, and most forecasters expect it to remain so. If you look at the labor market, also very strong, conditions are tight, and payroll job growth is continuing at very high levels. Household and business balance sheets are strong. And so all signs are that this is a strong economy, indeed one that will be able to flourish, not to say withstand, but certainly flourish as well in the face of less accommodative monetary policy. So I guess that's how I would say I'm looking at that. Of course, the objective is to achieve price stability while also sustaining a strong labor market, and that is our overall objective. But we do feel the economy is very strong and well positioned to withstand tighter monetary policy.
Thank you. Let's go to Howard.
Hi, Chair Powell. I was wondering, in the steps you have quite a markdown to GDP from 4 to 2.8%. I'm wondering how much of that do you feel is the result of the Fed's stiffer than expected action here? You talk about monetary policy operating with a lag, but is this going to bite quicker than expected?
I don't think that's a big piece of it, actually. I think some of that is just an early assessment of the effects of spillovers from the war in Eastern Europe, which will hit our economy through a number of channels. Highly uncertain, but you're looking at higher oil prices, higher commodity prices. It'll be so that we think that will weigh on GP to some extent. So that's part of what moved those assessments down. I think generally monetary policy works with a lag, so some of that would also be in there. But remember as well that 2.8% is still very strong growth. If we think that the potential growth rate of the economy is somewhere around 1 3/4%, 2.8% is strong economic growth. It would have been one of the strongest years, in fact, of the last expansion. So while it's lower than last year's 5.8%, it's still quite strong growth. So I would say it's quite a strong forecast.
So in that context, what would trigger you to go faster or slower on the rate hikes? Ongoing increases doesn't really tell us whether this is going to come in or evenly paced through the year.
So the way we're thinking about this is that every meeting is a live meeting, and we're going to be looking at evolving conditions. And if we do conclude that it would be appropriate to move more quickly to remove accommodation, then we'll do so. I can't be perfectly specific about it, but that's certainly a possibility as we go through the year.
Thank you.
Thank you. Let's go to Rachel at the Washington Post.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm curious if you can be specific on when you expect to see inflation will start to come down, especially with the combination of rates going up, fiscal aid dissipating from the economy, and supply chains getting better. And if you don't start to see that, how will you signal it? What will you be looking for, and what will you be looking for over the course of the year? Thank you.
So I guess I would say that before the invasion of Ukraine by Russia, so let's go back to that. I would have said that the expectation was that in the first quarter, maybe the end of the first quarter of this year, and then maybe stay at that level or a little bit lower, and then start to come down in the back half of the year. So now we're already seeing a little bit of short-term upward pressure in inflation due to higher oil prices, not natural gas a little bit, but not so much for us since we have our own natural gas supply, other commodities prices. The other thing is that you're seeing supply chain issues around shipping and around, lots of countries and companies and people not wanting to touch Russian goods. So that's going to be more tangled supply chains. So that could actually push out the relief we were expecting on supply chains generally. So I guess I would say that the expectation is still that inflation will begin to come down in the second half of the year. But if you look at where I read the SEP headline median, we still expect inflation to be high this year, lower than last year. And then we expect, though, particularly with the effects of the war, but also the data we've seen so far this year, we expect inflation to remain high through the middle of the year, begin to come down, and then come down more sharply next year.
Let's go to Nick at the Wall Street Journal.
Nick Timmeros of the Wall Street Journal. Chair Powell, over the last 6 months, the Fed has shifted its policy stance quite a bit. 6 months ago, you were still buying assets. Most officials weren't projecting any interest rate increases this year. And yet, despite the shift over the last 6 months, real rates are as negative today as they were then. So how concerned are you that further inflation surprises will offset the effects of recent policy firming by leading real rates to stay at levels that do not actually provide much restraint to the economy? Thanks.
So that's one of many ways of capturing the situation, which is that the committee really does understand that the time for rate increases and for shrinking the balance sheet has come. And I would just say, I would go back to the economy is very strong. As I mentioned, tremendous momentum in the labor market. We expect growth to continue. It's clearly time to raise interest rates and begin the balance sheet shrinkage. And I just wanted to say that as I looked around the table at today's meeting, I saw a committee that's acutely aware of the need to return the economy to price stability and determined to use our tools to do exactly that. You couched it in terms of real rates. I would say if you look at the SEP, you've got people getting close to or even above, in many cases, their estimate of the longer run neutral rate. So I understand that doesn't do it for real rates, but if you go out a year or two, many people are in their forecasts are having tight policy from a real interest rate standpoint. So that's something that we're focused on. Of course, it's a highly uncertain environment, and we don't know what's going to happen, but we do know that we're going to deploy our tools to achieve our goals, and that includes the price stability goal.
Let's go to Victoria at Politico.
Oh, hi, Chair Powell. So, looking at the summary of economic projections, you all have inflation coming down over the course of the year to 4.3%. And then you also have rates going up to what appears to still be below roughly what would be estimated to be the neutral rate, although I know that's a little bit uncertain. So I was just wondering, how much of inflation coming down do you see as actually being as a result of the Fed itself raising rates? And then also, if I could just ask, given that Sarah Bloom Raskin withdrew her nomination, what do you expect to do with the regulatory portfolio? Do you expect to assign a governor in charge of that?
Okay. So sorry, tell me again your first question.
My first question is, how much do you expect inflation to come down as a direct result of the Fed's actions?
Okay, so part of inflation coming down at the very beginning is clearly to do with factors other than our policy, and those would include potentially the supply chains getting a little bit better. Certainly base effects, you're lapping, as you know, when you look at a 12-month trailing window, you're lapping very high inflation in March, April, May, June of last year. So there should be some effects from that in the 12-month picture. Really what we're looking for, though, is month-by-month inflation coming down. And so it's really, it's all the things we've been talking about, that really haven't helped much, including the shift away from goods and back to services, including supply chains getting better, including labor force participation, all those things that have been sticky and is the base effects I mentioned as well. I think monetary policy starts.
Yep, did he freeze up? This is day live, this ain't mine.
So remember,
there we go.
We started talking about rate increases last year for some months now. Conditions have already incorporated a significant number of rate increases. So it doesn't start today. In effect, the moves are already priced into the market for a few months now. So so the clock is running on that, and I think some of that will be seen in the second half of the year as well. And on the regulatory portfolio, I would just say this: we have an obligation to carry out under the law, in supervision and regulation, and we're doing that. That's what we're doing. The committee is not active, so what's happening is things are coming to the full board, and we're voting on them. We're getting our business done. We got the stress tests done. We've looked at a number of proposals for mergers and things like that. So we're working ahead. Of course, we don't have a vice chair for supervision, as you mentioned, but we're making do with the situation we have, and a good number of things have come straight to the board for approval.
Let's go to Neil Irwin at Axios. Let's go to Neil Irwin.
Hi, Chair Powell. It's Neil Irwin at Axios. Thanks for taking our questions. In the Statement of Economic Projections, we see a forecast of median 1.9% Fed fund rate at the end of the year, 2.8 end of next year. Wondered whether that aligns with your own expectations, in particular on that point of overshooting the long-term neutral rate, and also if you can tell us anything about how that might be paced, front-loaded, back-loaded, how high is the bar for doing 50 at one meeting?
So I don't, Neil, I've never talked about my own SCP projection. It's in there, but I think Fed chairs have generally not done that because we just haven't done it. It's because we have to put together the consensus on the committee and present that consensus. So I wouldn't talk about my individual one. And in terms of the pacing of it, I would just point out that there's 7 remaining meetings this year. This isn't something we discuss or debate or agree on, but there's 7 remaining meetings and there's 7 rate hikes. I would add there's also the shrinkage of the balance sheet, which people do the math different ways, but that might be the equivalent of another rate increase just from the runoff of the balance sheet. So I don't know. We haven't made any decisions on front end loading or going steadily through the year. And as I mentioned, if you look at the SEP, a good number of participants do see more than 7 rate increases this year. And I can't give you, I'm not going to try to give you a really specific test for what it would take to do that, but I will say this, though, we'll be looking at the data as they come in. We'll be looking to see whether the data show expected improvement on inflation. We'll be looking at the inflation outlook and making a judgment. And we'll be going, each meeting is a live meeting, and if we conclude that it would be appropriate to raise interest rates more quickly, then we'll do so.
I don't know if they did a pause. Looked like their sound or something did something crazy. Look at them. Yeah, they probably dealing with some sound issues or something. Yeah, get it right. What's y'all thoughts so far? What you expected? The market started going down soon as the meeting happened. Then it started rebounding.
Try one more time. Colby Smith with the FT.
Because as soon as the meeting started at 2:30, the market went down. Then it started to rebound. They get paid all this money and they can't have their sound right. They dealing like me.
Okay, we'll come back to Colby.
Yeah, thank you, Chair Powell.
There
Thank you,
you
Michelle,
go.
for the question. I have a more basic question. The last time the CPI inflation, I know you look at PCE, but CPI inflation was as high as it is was July of 1981 when the effective federal funds rate was 19.2%. But given the current data, how far behind the curve of inflation do you believe the Federal Reserve is in your mind?
So I just would say a couple things. We have the tools that we need, and we're going to use them. And as you can see, we have a plan over the course of this year to raise interest rates steadily and also to run off the balance sheet. High inflation does not become entrenched while also supporting a strong labor market. And as I mentioned, if we conclude that it would be appropriate to move more quickly, we'll do so. I leave it to others to make the judgment you ask for.
And then just as a follow on that, I wanted to get you on the record on this. What impact has there been on your job, given the fact that
Yeah. What is going on with they
Lost you in the middle of the question.
Jesus.
Edward, can you repeat that question?
impact, given you're not actually confirmed and Governor Brainerd is not actually confirmed, has there been any impact on your job or the Fed's ability to handle inflation?
None whatsoever.
No.
Let's go to Colby
There
Smith
we
with the
go.
FT.
Thank you, Michelle. Chair Powell, how concerned is the committee about the notable pickup in services inflation, which is perhaps less likely to self-correct? And to what extent does it alter both the committee's long-term inflation expectations will not de-anchor in the coming months, as well as the balance of risks that the Fed may need to raise interest rates further above neutral than indicated in the dot plot? Thank you.
Thank you. So, of course, that's something we're watching report by report, and certainly we noticed it in the last meeting, and it's part of the overall picture. We have expected services inflation to move back up to where it was, and that's part of what's happening is, in the case of some services, prices are still getting back up to where they were before the crisis. In other cases, it's pretty clear that inflation has spread more broadly across services, and yes, that is concerning. In the meanwhile, we see some progress on the goods side, but really in this latest report, it was confined to vehicles, which is admittedly a large category. So, as I mentioned, the committee acutely feels its obligation to move to make sure that we restore price stability, and is determined to use its tools to do so.
Thank you. Let's go to Steve Leisman at CNBC.
Thank you. Mr. Chairman, I wonder if you could help me understand the kind of logic, if there is one, inside the SCP here. As I look at the median forecast, for example, for unemployment, it runs for the 3-year window below the rate.
Here they go again. Lord Christ, what is going on with everybody? Web stream.
The long run, or call it the neutral rate, so the economy still runs hot. And that is all true in a regime when you run, at least for 2 years, the funds rate above the long run rate. I guess my question is this: are you not give a forecast here that essentially suggests you will be continuing to run further behind the curve and never really get in front of inflation because the economy will continue to run hot?
Great question.
On a related issue, you said earlier inflation will take longer to return to price stability than we had originally expected. Isn't that a choice you're making? And if so, why are you making that choice to let inflation
Let's
run
go,
above
Steve.
price stability longer than you'd like?
Steve said, "Make it make sense."
Right. So our if you look, first of all, you're looking at medians, but understand that there's no, it's not something we voted on. It's not a plan. But if you look, people do have their by the end of this year, broadly people are at or close to, or in some cases above, their estimates of longer run neutral interest rate. Okay, so that should stop pushing, that should, in other words, that should be a removal of accommodation for monetary policy, basically. At the same time, we will have done significant balance sheet runoff, and you can think of that as further. In the next year, and just looking at the median, you're now above above the what people estimate to be the longer run median. And also in many people's forecasts, that actually amounts to tight policy in real rates as well. So why does unemployment remain at 3.5%? A couple points. One is the connection between in the economy we had before the pandemic, the connection between inflation and the level of the unemployment rate was not very tight. But this is clearly what this is an expectation that really it amounts to the idea that wage increases, which are now running above the level that would be consistent over the long run with 2% inflation, will move back down to levels which are still very attractive, full economy full employment kind of wages, but not to a point where they're pushing up inflation anymore. And as I mentioned, there are a lot of factors causing inflation to come down, and the reality is there are many moving pieces, and we don't know
saying
what
a
will
whole bunch of
actually happen.
nothing.
But no matter what happens, this is a committee that is determined to use its tools to make sure that higher inflation does not become entrenched. And so we are determined on that front, and we'll deal with what comes. This is a modal or most likely expectation, but we'll deal with what comes, whether it's better or worse.
Thank you. Let's go to Chris Rugaber at the AP.
Ooh, they got my man on the bottom right. He always go in.
Thank you.
I want him to ask a question.
Let me follow up a bit on that. I mean, there are a lot of economists skeptical that you can reduce inflation as much as you've penciled in without raising the unemployment rate. And I'm wondering just what are the mechanisms you see in reducing demand? I mean, outside housing and autos, how do higher Fed rates reduce consumer demand unless it's through higher unemployment? Thank you.
Well, if you take a look at today's labor market, what you have is 1.7 plus job openings for every unemployed person. So that's a very, very tight labor market, tight to an unhealthy level, I would say. So in principle, if let's say that our tools work about as you described, and the idea is we're trying to better align demand and supply, let's just say in the labor market. So it would actually, if you were just moving down the number of job openings so that they were more like 1-to-1, you would have less upward pressure on wages. You would have a lot less of a labor shortage, which is going on pretty much across the economy. We're hearing from companies that they can't hire enough people. They're having a hard time hiring. So that's really the thinking there. Is these are fairly well understood channels, interest sensitive, and basically across the economy we'd like to slow demand so that it's better aligned with supply, give supply at the same time to recover, and get into a better alignment of supply and demand, and that over time should bring inflation down. And I'll say again though, we don't have a perfect crystal ball about the future, and we're prepared to use our tools as needed to restore price stability. With as I mentioned in my opening remarks, without price stability, you really can't have a sustained period of maximum employment. It's one of our most fundamental obligations is to maintain and restore, in this case, price stability. So we're very committed to that. Of course, the plan is to restore price stability while also sustaining a strong labor market. That is our intention, and we believe we can do that. But we have to restore price stability.
Okay, let's go to Scott Horsley at NPR.
Thanks, and I apologize if this covers some of the same ground you just talked about, Mr. Chairman. I think I missed some of your answer there, but I have a follow-up question on the labor force. We have seen some gains in the prime age workforce in the last few months. I wonder what you anticipate when it comes to some of the older workers as the health outlook has changed. Are we going to see more recent retirees following Tom Brady back in the workforce, and what would that mean for wages and inflation?
You bring up Brady.
It's hard to say. You know, what we saw in the last cycle was that over the course of a long, steady expansion, labor force participation outperformed expectations, and that was just it was a tight labor market, but it was nowhere near as tight as this labor market, but it was a tight labor market, and so people stayed in the labor force longer. It wasn't so much people coming back in the labor force after retirement. That's not something that happens in the aggregate very much. But so that's what was happening. And more labor force participation is tremendously welcome. And of course, our policy does not in any way preclude that. This is a situation where wages have moved up at the highest rate in a very long time, and people are able to quit their jobs and move to better paying jobs in the same industry or different industry. So it's a really attractive labor market for people. And once, as we get past COVID, well and truly, it becomes an even more attractive one. So we hope that will lead to more labor supply. That's a good thing for the country. It's a good thing for people. And it also will, we think, help relieve some of the wage pressures that do put inflation more at risk. That last part is we'll have to see whether empirically it works out that way, but in principle it ought to help with inflation as well. It's not the only thing we're looking for though from inflation. We're looking for help from a number of different places, and most importantly from our own policy.
Okay, let's go to Rich Miller at Bloomberg.
Thank you, Michelle, and thank you, Chair Powell. I'm sorry, I'm having some communication problems, so I missed some of the stuff you've said, and if this has been asked. Since the FOMC met last January, financial conditions have tightened markedly. Equity prices down, treasury yields up, bond spreads risen, yield curve is flattened a lot, and even further this today, dollar is up. Is that welcome, and would you like to see more in order to achieve your goals? Thank you.
So as you know, policy works through financial conditions. That's how it reaches the real economy, by just the mechanisms you mentioned. And remember that the financial conditions we had for the last couple of years were a function not only of very aggressive and appropriately so fiscal policy, but also highly accommodative monetary policy. The monetary policy settings that we put in place at the worst parts of the pandemic. So it is very appropriate to move away from those. And yes, that will lead to some tightening in financial conditions in the form of higher interest rates and just the sorts of things. We're not targeting any one or more of those things, but financial conditions generally should move to a more normal level, so that because we know the economy no longer needs or wants these very highly accommodative stance, which so it's time to move to a more normal setting of financial conditions, and we do that by moving monetary policy itself to more normal levels.
When you say move to a more normal setting for financial conditions, that suggests to me that you want financial conditions to tighten further from where we are now. Am I drawing the right inference from that?
Well, yes. So I would say we look at a broad range of financial conditions, and of course, when we tighten monetary policy, we do expect that they will adjust in sync over time with monetary policy. It's not any particular financial condition, but a broad range of financial conditions. They will reflect, to some extent, they reflect any number of things. But yes, we need our policy to transmit to the real economy, and it does so through financial conditions, which means as we tighten policy or remove accommodation so that it's at least less accommodative, that broader financial conditions will also be less accommodative.
Thank you. Just a little housekeeping note. Those of you in this call may be having some tech issues. If so, I understand the broadcast is coming through clearly on www.federalreserve.gov. So you might go there for the audio. And now we'll go to Jean Young.
Hi, Chair Powell. I wanted to ask about the balance sheet discussion you had at this meeting. Can you give us any more details? Did you discuss whether to cap runoffs or whether to increase those caps over what period, if there were any details?
Yes, thank you for asking. So at our meeting today and yesterday, we made excellent progress toward agreeing on the parameters of a plan to shrink the balance sheet. And I'd say we're now in a position to finalize and implement that plan so that we're actually beginning runoff at a coming meeting, and that could come as soon as our next meeting in May. That's not a decision that we've made, but I would say that that's how well our discussions went in the last 2 days. So a couple things just to add. We'll be mindful of the broader financial and economic context when we make the decision on timing, and we always want to use our tools to support macroeconomic and financial stability. We want to avoid adding uncertainty to what's a highly uncertain situation already. So all of that will go into the thinking of the timing around this. In terms of I would say this. I don't want to get too much into the details because we're literally just finalizing them. But the framework is going to look very familiar to people who are familiar with the last time we did this. But it'll be faster than the last time, and of course it's much sooner in the cycle than last time. But it will look familiar to you, and I would also say that I'm sure there'll be a more detailed discussion of our in the minutes to our meeting that come out in 3 weeks, where I expect that it will lay out pretty much the parameters of what we're looking at, which I think will look quite familiar.
Thank you. Let's go to Michael McKee at Bloomberg TV.
Mr. Chairman, since September of 2020, you've been operating on a monetary policy framework that let the economy run hot to bring unemployment down. That seems to be over, but I'm wondering how you would describe your reaction function now. What is it that the Fed is trying to do other than bring inflation down? In other words, is it we're going to keep raising rates until it comes down to an acceptable level?
Told you he'd bring the heat.
I want to clear one thing up again, and that is that nothing in our new framework or in the changes that we made has caused us to wait longer to raise interest rates. What we said in the framework changes was, and this was really a reflection of what had happened for the preceding couple of decades, actually. What we said was, if we see low unemployment, high employment, but we don't see inflation, then we're not going to raise rates till we actually see inflation. That's what we said, and that was the sense of it. There was no sense in which if we got a burst of really high inflation, we would wait to raise rates. That's simply not in the framework. In fact, quite the contrary. The framework is all about anchoring inflation expectations at 2%. So I do hear this, that the framework, we can't blame the framework. It was a sudden, unexpected burst
Brody
of inflation.
mad.
And then it was the reaction to it, and it was what it was. But it was not in any way caused by or related to the framework. So come to today. I think our vision on this on the committee is very, very clear. What we see is a strong labor market. We see a labor market with a lot of momentum, great job creation, and we see the underlying economy strong. Balance sheets are strong. Yes, there are threats to growth from what's going on in Eastern Europe, but nonetheless, in the base case, there's a pretty broad expectation of strong growth. But inflation is far above our target, and the help we've been expecting and other forecasters have been expecting from supply side improvement, labor force participation, bottlenecks, all those things getting better, it hasn't come. And so we're looking now to using our tools to restore price stability, and we're committed to doing that. And you see that, I think, in the summary of economic projections, and you see that in the decision we make, and you will continue to see it in the decisions we make going forward.
If I could follow up by asking, I guess what you call it is the Paul Volcker question. You don't think unemployment is going to rise significantly, but if it does that temper your desire to keep raising rates?
Like, the goal, of course, is to restore price stability while also sustaining a strong labor market. We have a dual mandate and they're sort of equal. But as I said earlier, price stability is an essential goal. In fact, it's a precondition really for achieving the kind of labor market that we want, which is a strong and sustained labor market. We saw the benefits of a long expansion, a sustained labor market. It pulled people back in, and there were really no imbalances in the economy that threatened the long expansion. The pandemic arrived. It was just a completely exogenous event. So that's how we're thinking about it. We of course want to achieve price stability with a strong labor market, but we do understand also that really you can't have maximum employment for any sustained period without price stability. So we need to focus on price stability, in particularly because the labor market is so strong and the economy is so strong. We feel like the economy can handle tighter monetary policy.
Thank you. Let's go to Brian Chung at Yahoo.
Chair Powell, hopefully no tech issues here on this front. Wanted to ask just kind of the broad question about how you are communicating what the Fed's doing here today to the average American who might not be reading the dot plots or understanding what the SCP is. How is the 25 basis point hike today and then the signaling on future Fed policy going to address the inflation that they're feeling at the stores on a daily basis?
Sure. So I guess I'd start by just assuring everyone that we're fully committed to bringing inflation back down and also sustaining the economic expansion. We do understand that these higher prices, no matter what the source, have real effects on people's well-being. And really, high inflation takes a toll on everyone, but it's really especially on people who use most of their income to buy essentials like food, housing, and transportation, where, we've all seen charts that show if you're a middle-income person, you've got room to absorb some inflation. If you're at the lower end of the income spectrum, it's very hard because you're spending most of your money already on necessities and the price is going up. So, but it's punishing for everyone. So it has been a difficult time for the economy, but we do anticipate that inflation will move back down, as I mentioned earlier. It may take longer than we like, but I'm confident that we'll use our tools to bring inflation down. And you ask about rates. So the way that works, I would explain, is as we raise interest rates, that should gradually slow down demand for the interest-sensitive parts of the economy. And so what we would see is demand slowing down, but just enough so that it's better matched with supply, and that will bring inflation down over time. That's our plan.
Interesting.
Thank you. Let's go to Jolene Kent at NBC News.
Hi, Chair Powell. Thank you so much for taking my question and doing this today. My question is a follow-up to what Brian just asked. What is your message to consumers out there who can no longer afford the basics due to this high inflation?
You're about to say the same thing.
Well, that is, yes, indeed. As I just said, I think we do understand very much, and we very much take to heart that it's our obligation to restore price stability. And we've had price stability for a very long time and maybe come to take it for granted, but now we see the pain. I'm old enough to remember what very high inflation was like. And, we're strongly committed as a committee to not allowing this higher inflation to become entrenched and to use our tools to bring inflation back down to more normal levels, which our target is 2% inflation. So we will do that. And, I just would want people to understand that, but the way we do that is by raising interest rates and by shrinking our balance sheet, and so financial conditions will become, at the margin, less supportive of various kinds of economic activity. That will slow the economy, while also allowing the labor market to remain very strong. And the good news is the economy and the labor market are quite strong, and that means the economy, we think, can handle interest rate increases.
Follow up to that, obviously the Federal Reserve walking this very complicated fine line, trying to avoid a recession. For the consumers out there who are worried about their jobs in a possible recession, what do you say to that? Well,
I say that our intention is to bring inflation back down to 2% while still sustaining a strong labor market, and that the economy is very strong. If you look at where forecasts are, people are forecasting growth that's strong within the context of the U.S. potential economic output. And we expect that to continue. And to the extent the data come in different, then of course our policy will adapt. But we do believe that our policy is the appropriate one for this forecast, and we believe that we can bring down inflation. We believe that we can do so while sustaining a strong labor market. The labor market it's not strong in the ordinary sense of the world. We have not seen a labor market where there are 1.7 job openings for every unemployed person, or where if you add job openings to those who are employed, that's actually substantially a larger number than the size of the workforce, than the number of people who actually count themselves as in the workforce. So this is a situation where demand is higher than supply, and when that happens, prices go up. So we need to use our tools to move supply and demand back. And we don't think we need to do this alone. There will be other factors helping that happen, but we certainly are prepared to use our tools, and we will.
Thank you. Let's go to Simon at The Economist.
Thank you, Michelle. Thank you, Chair Powell. Sorry to take you away from inflation for 1 minute. May I ask about the sanctions on Russia, and specifically
there we go. Talk about Russia.
Assets. Of course, that raises a similar risk for other sovereigns around the world and your biggest companies potentially. Any concerns about in the long term how this might affect the dollar's status as the permanent global reserve currency? And in the past couple of weeks, have you had to deliver any kinds of reassurance to other central bankers around the world?
Well, so of course, central bankers around the world are generally very, very in favor of these sanctions. But let me say this: sanctions are really the business of the elected government, and that's true everywhere. So the administration, the Treasury Department in particular, and other agencies, they create these sanctions. We're there to provide technical expertise, but it's not our decisions, so I'm reluctant to comment on sanctions really much because again they're not for us. We have a very specific mandate, and these are really the province of elected governments, as I mentioned. So I have to leave it at that. Sorry.
Thank you. Let's go to Nancy Marshall-Genzer at Marketplace.
Hi, Chair Powell. Thanks for taking the question. You've been talking a lot about rising wages, which on the one hand is a great thing, but are we possibly seeing the beginning of a wage price spiral?
So the way I would say it is this: we first of all, I would agree with the premise that wages moving up is a great thing. That's how the standard of living rises over time, and generally it's driven over long periods by rising productivity. But what we have now, if you look at these the wage increases that we have, we look at we're blessed with a range of measures of wages that all measure different things. But right now they're all showing the same thing, which is that the increases, not the levels, but the increases are running at levels that are well above what would be consistent with 2% inflation, our goal, over time. And that may be, we don't know how persistent that phenomenon will be. It's very hard to say. And that's really, I think, the sense of your question about a wage price spiral is that something that's going to start happening and become entrenched in the system? We don't see that. You can see, for example, in some sectors that got very high wage increases early on, those wage increases look like they may have slowed down to a normal level, but it comes back to what I'm saying here, which is there's a misalignment of demand and supply, particularly in the labor market, and that is leading to wages moving up in ways that are not consistent with 2% inflation over time. And so we need to use our tools to guide inflation back down to 2%. And that would be in the context of an extraordinarily strong labor market. We think this labor market can handle, as I mentioned, tighter monetary policy and the overall economy can as well. But yes, wages are moving up faster than is consistent with 2% inflation. But it's good to see them moving up. But it wouldn't be sustainable over too long of a period to see them moving up that much higher. And that's because of this misalignment between supply and demand. We expect to get more labor supply. We did last time. We got more than we expected during the last cycle. This time we've gotten much less than expected. So it's not easy to predict these things. But we do expect that we'll get people coming back in the labor market, particularly as COVID becomes less and less of a factor in many people's lives, something we all wish. So that's how we think about it.
The LA Times.
Hi, Chair Powell. I think you said to the Senate earlier this month that in hindsight, the Fed should have moved earlier. And it sounds like today that you don't think that it is late. And just wanted to get your clarification on that. And if it is, if you still think that the Fed is behind the curve, how much behind the curve is it?
Right. So we are not. We don't have the luxury of 20/20 hindsight in actually implementing real-time decisions in the world. So, the question is, the right question is, did you make the right decisions based on what you knew at the time? But that's not the question I was answering, which is knowing what you know now. So I think if we knew now, of course, if we knew now that these supply blockages really and the inflation resulting from them in collision with very strong demand, if we knew that was what was going to happen, then in hindsight, yes, it would have been appropriate to move earlier. Obviously, it would be, but again, we don't have that luxury. And then but that's a separate question from your other question, which is behind the curve. And I don't have the luxury of looking at it that way. We have our tools, powerful tools, and the committee is very focused on using them. We're acutely aware of the need to restore price stability while keeping a strong labor market. And what I saw today was a committee that is strongly committed to achieving price stability in particular, and prepared to use our tools to do that. We're not going to let high inflation become entrenched. The costs of that would be too high, and we're not going to wait so long that we have to do that. No one wants to have to really put restrictive monetary policy on in order to get inflation back down. So frankly, the need is one of getting rates back up to more neutral levels as quickly as we practicably can, and then moving beyond that if that turns out to be appropriate. And as you can see, it is appropriate in the sense to people's SEPs. They do write down levels of interest rates that are above their estimate of the longer run neutral rate. And there's also a range of estimates too, as you will see if you look at the details of the SEP. But thanks for your question.
Okay, thank you all. Thanks, Mr. Chair.
Thank you.
Okay. Let's back up out of this. Sorry about the audio. Usually, hello. Usually I have it set whenever I screen share, the audio cut off and I can mute my mic. But since somebody haven't updated the app, and if I update the app live, it needs to reset. So I really need to do that like ASAP, because that's the worst thing happening. So I have to play the sound through my mic instead of through the system, which I don't like. What's y'all thoughts overall? Rates, they doing a 25, quarter% on the rate hike. I believe him saying it's going to last longer than expected was a surprise. He don't have an answer for how long it's going to raise. And, the market first reacted bad, went down when the meeting started. Then after a while, it all rebounded. I think the market really have all of this calculated in. I don't know. We're going to see. I already estimated that this will be a red year overall. Looking like it is. I don't think we're going to necessarily reach a recession. But with you raising interest rate price and don't have an end goal, I don't see a good a good solution, man. So I want to know what's y'all thoughts about everything. Shout out to everybody that's in here. If you are not signed up already, let me go ahead and hit y'all with this. We have, since rates are being raised, let's go ahead and raise these rates with your APR and APY with Hodlnaut. If you do not have you a Hodlnaut account already, what are you waiting for? You might as well earn some good money on your crypto, because especially this year, while the market is trading sideways and going down, you want to have a place to be able to be able to put your money. Easiest way to earn interest on your Tether, on your Bitcoin, DI, whatever it is, you can earn up to 12.73% APY. I have money multiple places in it. You can test the app out just by clicking demo, and they give you an example. They give you some free fake money so you can see exactly how the app work. It's gonna have your account overview. They put 16,000 in here. Stop crying, kid. And you get to see exactly how it looks. You get money going like that, and you get paid every single Monday. Definitely check out Hodlnaut. I will put the link in the description, and I will put it at the top of the comment section once I get finished. And also, we got my stock people in the building. We need to talk about Moomoo. Moomoo give you a lot of things that a lot of companies do not give you. You got zero trading commissions. You're spending $0 whenever you trade, and it's a one-stop investment platform where you can get everything here. You can get training courses. Literally, you got whole courses that teach you how to invest, what is a stock split, how everything works. You have different games. You get free level 2 marketing data that usually costs like a Webull. I think it's like $5. And right now they are giving you up to 3 free stocks. How they're giving you 3 free stocks? That's because I'm an affiliate with them, and they are hooking all of my customers up with 3 free stocks. And I can show you, not right here, but right here. You're going to get 1 free Neo. You're going to get 1 stock from $3 to $3,500 just for signing up. And you're going to get 1 for $9. Shout out to Moomoo. Shout out to Hodlnaut. So while y'all ask some questions, I can hit the link in the description. La description. So what's going on to my beautiful people that's in here? So what I'm probably going to do today, since it's warm outside, we're going to probably go to the park. Enjoy a little bit of park fun for a second. And get out the house. And also, I need to eat. I haven't ate nothing lately. Let's see, we got Moomoo. Moomoo. And then we're going to do Hodlnaut. See what my count at with Hodlnaut. 29. So we ain't hit over 3,000 yet because I didn't switch anything over to Bitcoin. I'm technically losing money, but I think everything is going to go back down. Hodlnaut. I hate that it's not right, but we'll figure it out. Moomoo at the top, Hodlnaut is at the bottom. I will edit and change it later. Corey say the broke stay broker, pay more and everything goes up, but you can go through $2 billion till you can give $2 billion to Ukraine and they can keep our economy down. Yeah, the way we spend money don't make no sense. Yes, tell them didn't miss a success get a free stock of Tesla. I wish he did get a freaking free stock of Tesla. What did she get? She got, I don't know. I think I did a video. When she got her free stock. I wish it was Tesla. I don't think it was. That would be amazing. She ended up getting that. But yeah, man. Yep, we got it in here. At the top is Moomoo. At the bottom is Hodlnaut. I didn't make it all cute and stuff. We'll do that later. But yeah, make sure you sign up. Once you do it, it go right to my phone. Up. I just got an email. I got some dividends. I just got some dividends from McDonald's. So shout out to McDonald's. Everybody that buy McDonald's, just got some dividends with them. That's always a win. So yeah, lately I've been doing some DeFi videos. If you haven't checked out my most recent videos I've been doing, let's check some of them out. We did MMF. Actually, I like to look at it different, but oh well. Let's look at it like this. There we go. So we did Future Crypto last night, covering the Joe Biden executive bill. So we covered that. Staking MMF. MMF looks amazing. I can't even hold y'all up. It looks like a great protocol on DeFi, on Kronos. They're number 2 already, and this company been established like a month. So that's crazy. The coin circulation is great, $150. Price over $1. I did an example how to trade some MMF and stake some plus MMO. I would do some more videos about it. Right now, you got Crow and MMF APR over 300%. You got stable coins over 300%. Have some good money over here. So it's definitely money to be made. So I got some over there. What is going on with Tonic? Tonic. I did a video with Tectonic. Enter that. I only staked a little bit with Tonic. Tonic price been going crazy lately. So I need to do some more money in Tonic. Some more money. So I need to do some more money in 3 different places today. I think I did like 1 million tokens when I did the video to explain it. Yeah, but we made some money. It looked like it went higher. So I would take it. We didn't went up. So yeah, the DeFi world has been looking good. The market is doing a small run right now. I think it's going to go back up to this, close to this high when it shot up. So for Bitcoin to do it, it'd be 41,400. Right now it's at 40,000, so I have some ways to go. I think Ethereum is close to where it was at when it did that spike. This spike was at 27.2, and right now we are at 27.2. So Ethereum is close. Well, was at 27.2. It's close to where it was at. I think it's going to hit that, then go back down. But the market reacted good to what it was saying. Definitely take advantage, buy crypto. You see in the last 24 hours, the top coins that's leading is Aave. Sandbox been going hard. We got to see what Sandbox is working on. What's up? That's Black. Yeah, you smart. You the smartest kid in the whole wide world. What am I supposed to be looking at? What I was looking at? Sandbox. The sand. Ethereum price. Just got a notification. Ethereum price is going up. It better not go up too much. Now, I will buy in with my stablecoin money if Bitcoin hit over 46,000. That's when it would go past what I expected to do. Then I will buy in at the high. Sandbox and Paris Hilton. That's why they're going up. So Paris Hilton is really DJing. I talked about it last night on a live. They said she teamed up and she's going to be DJing. I didn't know it's like real life. Because I haven't heard from Paris Hilton in years. But I guess she is a DJ? Is she any good? Is this the real Paris Hilton, y'all? Somebody in the comments, let me know. Is Paris Hilton DJing now? I like it. Shit. So she's DJing in the Sandbox. Today is the day. The first Snoop Dogg level Sandbox game is available. I worked for months on the big project. I can't thank enough of the amazing artists. So is this a Snoop Dogg game? The first Snoop Dogg level, the Sandbox. So Snoop have his own level? Snoop is such an OG, man. Freaking love Snoop. Yep, and you see it's going up. What are you talking about? So I guess he got an NFT going nuts. Foreplay opening the real Snoop Dogg. Good stuff. Sandbox are doing big things, man. Shout out to my Sandbox holder. If you're a Sandbox holder, it's a win for the culture. Let's get the likes up real quick. If you are new in here, make sure you hit that like button. Yeah, the market going up right now. Yeah, the market is reacting low good. Can't stake your tonic. Why not? The system is down. It was working for me. She's been a DJ since Young Money. I never knew Paris Hilton was a DJ. I guess I don't know. I just know her parents or whatever it is. Yeah, she's definitely getting that bag. Where Sandbox price is going up. Good stuff. She's good. Yep, seen her DJ opening resorts. Oh, so she's big time. Neo just mooned. We was talking about Neo. If you had got your free Neo stock with Moomoo just by depositing $1, then you would have took advantage of it. Let's see. He said Neo mooned. Where you at, Neo? I don't even know why I go to hardware and I got all these on my damn watch list. Neo ain't did nothing. Neo ain't moon nowhere. Neo just chilling. Neo just chilling. Well, went from 14 to 17. Did a low popping. I think all the EVs stocks are technically going up right now. Technically. Let's see. She was heavy with EDM in Dubai. Paris been doing it for years. She said, I never knew, but I guess I don't follow Paris Hilton, so I just know the Hilton hotels. Isn't the Hilton hotel just like her family? Unless I'm crazy. Yes, that's hot chick. Believe it or not. Keep thinking about tap more to music projects. So to say projects if they want to be reviewed. What you talking about, player? What you talking about? But yeah, I'm about to it's warm outside. Probably take the kid to the park, eat some food. I have some stock videos I need to do today. I'm gonna try to do easy videos where I can screen record. Let me know what videos y'all want to see me talk about. I need to talk about algo. Y'all been asking about that. Got a few videos we need to do. But first, I'm about to go have fun with my son and the sun. So if you haven't did it already, click the link in the bio, sign up for all the good stuff. I will probably come back later on today. If not, I'm going to release some videos. Hit me up on Twitter, hit me up on Instagram, hit me up on Facebook, all at Lando Success. Fed meeting went interesting. I will have to digest it more and come back to it. Omar say, see you later. Oh, you want to shoot them up? You want to shoot them up? Let's shoot them up. Omar says time to shoot. shoot him up. I'll shoot you up. All right, go play. He still don't know how to work that. All right, see y'all in a little bit.